What's up, everyone? All right, so we're going to go over the trades from today. It's a green day, but you know what? I'm feeling triggered. Today was frustrating, and I think my issue is that it is, I mean, today I rated as a 1 or a 2 on my, 10 scale of momentum. We haven't had, since I started tracking at the beginning of January, we haven't had a single day that was like the highest day was a 5. We haven't had any really solid days of back-to-back momentum. We had 2 days at the beginning of the month that were back-to-back 4s and 5s, and then it went to 3, 2, and then it just petered out from there. Thursday and Friday were both zeros on my scale of 1 to 10. Yesterday was a 4. I got a great trade. Look, yesterday was great. $11,000 of profit on SGMT. And then I come in this morning, I pull up the scans early, it's around 6:45 on my phone. And, I saw right away, I was like, well, leading gapper's like 18%. DWAC, yes, I saw it was grinding higher yesterday. It's not one that's easy to get in and out for breakouts. It's like a buy, hold, and just let it ride stock, which is not my strategy. As such, I wasn't able to make money on it. So DWC is sort of an annoyance. It's just like a distraction. Save, Spirit Airlines, that's a distraction. PHUN, that's a distraction. So right now we've got attention really dispersed among so many different stocks in the market. And the leading gapper this morning was like 30%. So, we had a stock that popped up. I was able to trade it, made some money. Had another one that popped up, traded it, and gave back most of what I had made. So that's where I was like, you know what? I'm going to say I'm grateful to be green, but I'm getting triggered. I'm getting frustrated. And if I keep trading, I am 100% going to go red because I'm annoyed. That's my feeling. And, it's just hard when we have these extended periods where it's cold. On the other hand, I am feeling really good about my win from yesterday and reminded that, if I only took a few trades each month, but I waited until we had something with that kind of quality, with that kind of momentum, I would do really well. And that helped me this morning. It helped me because this morning we had ENSC pop up on the scans, and some traders were like, all right, should Ross, what do you think? Do you like it? Are you a buyer? And I was looking at it and I was like, guys, this would be a giant waste of my time. I'm not interested in this. I don't want to trade it. How much am I going to make 5,000 on this stock? Am I going to make 10,000? Not a chance. And, I don't want to say that I'm not going to trade anything that doesn't give me the chance to make, $5,000 or $10,000 because, $500, $1,000 winners certainly add up as base hits. But at the same time, I looked at this, it had just popped up to 183. It dropped back down to 134. It popped back up here, it pulled back. And this was the area where people were like, okay, Ross, so you thinking about taking a trade for the breakthrough, $2? And I was just like, looking at the level 2, it was really stacked up. I was looking at the price action. I just said, you know what? I don't think it's going to happen on this one. And, I was right, but it could have easily churned a bunch of commissions, getting in, getting out on it. And, it would have been unnecessary. It would have been a waste of time. RVSN is sort of a similar story. It is up, but, right now it's right at the 200 moving average. So look, if it can break over and it can hold over, that's awesome. We are coming into this resistance area. It's pretty clear resistance, both the 200. We'll see what it can do. You know what I mean? Like I have sort of low expectations because it's continuation from yesterday, but yesterday it wasn't really that easy. It popped up and then pulled back, and then it squeezed up pre-market and then pulled back again. And now it's punching up now. What do you think is going to happen next? Probably another pullback, right? Whoa, jackknife, right? Look at that. Come on, man. From 410 down to 350, that's a jackknife. And this is where the high frequency trading algorithms are just like, they are just screwing retail traders so badly. So what's happening on those kind of moves is the stock starts squeezing up. It starts coming into the breakout point, and people start, hammering the ask, buying. And when that happens, these algorithms automatically pull their orders out. And so all of a sudden, the stocks will start to squeeze up because they pull their orders. And this is what's so frustrating. if you ever have like a 50,000 share order or like a big order and you press the sell button, you know what's going to happen? You're going to get filled all the way down. And then as soon as your shares are sold, it's going to come right back up. That's what happens. And this is kind of on an even bigger scale because it's, millions of shares of volume. So millions of shares of volume are coming in and it's squeezing the stock up. The market makers are pulling their offers. And then what's happening is people are selling. So people are selling at the breakout and they're just hitting like what I would assume are essentially market order sells, and it pulls all the way back down. So this is a combination of sort of a characteristic of these high frequency trading algorithms and the way they respond to big orders. So I think, we're seeing these jackknifes because we're seeing big sellers who are basically hitting a market order sell as these are coming right into resistance. Ultimately, there are traders out there who are sort of creating this jackknife effect by slamming huge sell orders right into the top. And then that sort of sparks the beginning of the momentum back to the downside. So, look, I think that's also a feature of a cold market. In a hot market, marketing 50,000 share orders is going to put someone deep short. And then if it rallies right back up and halts up at 450 and then goes to 556, 657, that person's going to get pretty much wrecked. But I think there are some traders out there who are trading these really aggressively. They're hammering the offer on it, or they're hammering the bid on it when it comes up to these resistance areas, and it's creating these flushes. So what does that mean for the traders like me who are trading with relatively smaller size, or maybe you if you're trading with even smaller size than me? I think what it means is that right now, when we have a stock that has really, really high volume like this has, we have to recognize that this becomes a target for those big deep pocket traders, whether it's a fund or, some kind of like hedge fund or something, or it's a prop firm, or some, I don't know, individual traders. I don't know. I'm not sure who it is, but whoever it is, in order to size in and out with 50, 75, 100,000 share positions and try to be, pushing a stock around like this, you need quite a lot of volume, right? So this is where we see when these get high volume, this is when we get these traps. And we saw it yesterday. I can't remember which one it was, but I mean, we've been seeing it. Well, we saw it yesterday in RVSN as well, but we've been seeing it again and again and again, that when a lot of these stocks come up to these levels, they get hammered back down. Now, on the other hand, you have stocks like SGMT. Now, SGMT didn't really do that in this squeeze from 8 to 20. So what was different about this one? Well, the total volume was actually lighter. It's not that it didn't have volume. It's not that it wasn't liquid, but the volume was not as heavy. This did a pulling away type of move. So these types of moves can be really dangerous for short sellers because it's just sort of slowly grinding higher and higher and higher and higher, and the volume's picking up, and next thing you know, it's skipping dollars a share. From $7, break a VWAP to 8, 9, 10, 11, 12, 13, 14, pulls back, then goes up here even higher. So this is a price range where it's a little higher price. The spreads are a little bit bigger, and I tend to do better in this price range. Under 20 still is my preference, but above 5. It tends to be these lower price stocks, like RVSN and some of these others that just become a target for these types of rejections. So once you sort of learn that pattern, you also recognize not to overstay your welcome too much. So anyways, so my first trade was on SBET. This stock was halted pre-market. It actually had news that came out. I jumped into it as soon as it resumed its halt, which was right here. So it actually went from 250 up to a high of $5. And I held through that whole move and then sold on the way back down. I was like, well, let's see what this wants to do. I thought, is this going to be one that goes from 5 to 6 to 7 to 8 to 9 to 10? And it didn't. But in any case, I bought small size. I got a fill of 1,000 shares. And then my second fill, which I tried to add another 1,000, I got only a partial fill of 800 shares. So anyways, I made about $1 a share on that position. as it was coming back down. And of course, glad I honored my profit stop and didn't just hold and hold, because it's pulled back quite a lot. And then the next trade was NVVE. This one is a real source of annoyance for me, which is why I kind of was like, you know what, I'm done, you guys. So on this one, I was watching it as it came up to 350, but I felt like, is it really obvious? So many people are watching DWAC and Spirit Airlines and PHUN and all these other stocks. I was like, I don't know if this is obvious enough. So there's a 10,000 share seller at 350, and I was like, nah, I don't know. It was 335 by 350. It's 15-cent spread. So it's like, I don't think so. Anyways, it comes up. I end up getting it at let's see. No, so it ends up squeezing up to this halt right here at 442. It then resumes. I did a dip at 499, got out at 5, add back at 530. It dips down. I add at 480, and then I stopped at 450. So I ended up losing $1,000, $1,100 on NVVE. And I was just like, you know what? This is dumb. I'm just gonna close up $500 today, and I'm over it. I'm not gonna keep trading in this environment. I would rather wait for something that has the potential like SGMT, and then hit that with some size and make $10,000 like I did yesterday. And if I do that, 4 or 5 times a month, if I can get something like that once a week, not right now, maybe, but every couple weeks, that's fine. You know what? In a cold market, that's fine. And it's tricky because, you don't know which one is going to be the one. So you end up taking trades because you're like, oh, well, maybe this NVVE is going to be the one. It's a recent reverse split. It's got a big news headline. It's got a ton of room to the 200. So yeah, what did that kind of look like? It could be the one. Yes, except time of day. Time of day is getting a little later for my window of when I'm usually doing the best. The times that I'll trade later in the morning, like till 10 or 11 or 12, is usually when I'm already doing really well, right? And even yesterday, I did really well, and then just kind of everything stalled out. So, yeah, except for DWAC, but there's a grinder. So for the most part, everything kind of stalled out. I think that most likely my best days will continue to be from a stock that starts squeezing up pre-market, on news from pre-market, and then continues. NVVE totally could have done that, but nobody cared about the news pre-market. And then when the bell rang, it starts to move up. But, it was kind of like, I think it missed its opportunity to really do something exciting today. So I have to show up every single day. It would be nice to be like, oh, I'm only going to show up on the days when it's hot, but you don't know what those days are going to be. After a big move, the next days can be good. So you could show up the following days, but anyways, then you would still miss the big move. So the best thing for me is to show up every single day and to look at the scans, but then also make an assessment fairly early on of whether or not this is a day that it's going to happen. And if it's not going to happen, then it's better for me to preserve my capital because, last Wednesday, I ended up getting a little bit stubborn, a little frustrated, and I ended up finishing the day down $6,000. And it wasn't a day that probably under any circumstance had the potential to give me $10,000 or $15,000 of profit. I shouldn't have lost that much. I just started kind of fumbling around with these low quality setups, and I was like 1,500 loss there, 1,500 loss there, 1,500 loss there, and all of a sudden, there you go, you're down 6,000. So my focus right now is to continue to try to wait for good quality setups to get aggressive on, especially, in the wake of that loss last week. I'm glad I had the recovery yesterday. Today, when I was up 1,700, I was like, look, it's not bad. And then NVVE started to pull away. Anyways, I'm a little bit bummed that it rejected as hard as it did. It really rejected hard. And that's a shame. But you just never know. And there were some indicators that I should have. I don't know. Maybe just because of time of day more than anything, and because of dispersed attention. Maybe I really should have just waited, but anyways, it's water under the bridge. So, I am finishing the day up $500, which is good. Look, any day that's a green day is good, making some progress and continue to add progress on the year. I'm green on the year, which is great. Not everyone can say that. So I just need to keep, chipping away here and showing up every day, dipping my foot in the water. And, even the first trades yesterday on SGMT, I wasn't sure how far it was going to go, right? I mean, the first trade could have been $1,000 loss when I got in around 10, but it ended up working. And then once I had a cushion, I was able to size up. So those first trades of the day are always a little like, touch and go. And then if I can get myself in the green, then it's like, okay, I'm zoned in, time to step up, and let's see what I can do. So I gotta, I gotta be kind of focused in on this type of setup. And, something that I encourage you guys to do, and you can certainly do, or something I'm going to do, and I encourage you to do as well, is, just grab a screenshot of that, print it out, print out that chart and save it on your computer, whatever. So, you can just pull that up anytime you want, or have it next to your desk and be like, that's the type of thing I'm looking for. I'm looking for something that's moving. I'm looking for something that's pulling away. And then when you pull up, I don't know, an RVSN or something like that, that's just choppy. It's like, this isn't the type. Look at all those topping tails. It's not right. ENSC, no. And they don't usually start this cheap. The big moves usually don't. I mean, so, occasionally, but not usually. So anyways, yeah, just kind of a slow day today, but green, nonetheless, green is good. And I'll leave to trade another day. So I'll be back at it first thing tomorrow morning. Reminder as always that trading is risky. My results aren't typical, and there's no guarantee you'll find success. Whether you trade on your own, you'll learn from me. So take it slow, manage your risk, practice in a simulator before you put real money on the line, and I'll see you back here tomorrow morning. All right, see you tomorrow.